Oh, holy smokes. Elon Musk's master plan is working. This is insane. Look at all of these different articles basically saying Elon was right. This is insane because it's the opposite of what everybody in the mainstream media has had to say about Tesla. Oh, Tesla reducing prices. Tesla's the only profitable Western manufacturer of electric vehicles. And quite frankly, the only reason BYD, the Eastern manufacturer of EVs, is profitable is because they're doing hybrids. But I want you to watch this trend, okay? Ready for this? This is absolutely insane. Watch this. Toyota cuts EV 2023 sales forecast by nearly 40% in latest questionable strategy shift. Listen to this. Although Toyota expects to record growth in this fiscal year, Toyota is cutting its EV sales forecast by 40%. In Toyota's latest questionable strategy shift, the company will lean into hybrids, quote, to avoid the price competition in the EV market. In other words, what is often deemed the most reliable car in the world, a Toyota, is literally getting replaced and quitting the electric vehicle battle, the fight to be a leader in EVs. They're sticking with hybrids. You know, yesterday, Brett Whitten over at ARK Invest, you know what he said? He said every time you have a shift of industry or of like an innovation rather, is a shift of innovation, you pass the baton to a different company. His example was, we went from code-based computers at IBM to point and click, the baton was passed to Microsoft. When we went from point and click to touch, the baton was passed to Apple. And with every subsequent large innovation, the baton gets passed. I think this is also true of vehicles. I think Toyota, which manufactures, somewhere between, depending on the year, 10 to 15 million vehicles per year, I think Tesla becomes the next Toyota. That's just my opinion. But anyway, I'm obviously a bull on the stock. But I invest in the stock because I'm bullish on their future, right? I'm not bullish on it because I'm in the stock. Anyway, look at this one. Mercedes executive says the electric vehicle market is a pretty brutal space because of price wars. They're basically saying because of Elon. But Elon's profitable, cuts prices, still freaking profitable. They've actually just increased prices twice on some Chinese models. And high interest rates are making it an unsustainable business. Nobody knows what the F they're doing except for Elon. Elon will be like the last one standing at Tesla in the electrical vehicle space. This is crazy. Electric vehicles are losing their luster as major automakers grapple with waning customer demand and the realization that mass adoption of EVs won't happen without hiccups. Hiccups for them. Tesla's gone through the hiccups already. Mercedes-Benz is the latest to feel the pinch of high interest rates on consumers. They're calling it a pretty brutal space. Basically, their stocks are going down, and because their stocks are going down, they're like, you know what, maybe we should slow down our plans to invest in electric vehicles, which is literally the short-term minded thing to do. In the short term, you stop investing in electric vehicle manufacturing capacity so you can pump the stock in the meantime. In the long term, you should be investing in electric vehicles, which is exactly what Tesla is doing. But they're not realizing this. So totally stupid. So who ends up getting the Joe Biden tax credits? Elon, baby. Elon gets more of the tax credits, especially since in 2024, you're going to be able to get the credit at the time of purchase for an electric vehicle rather than on your tax return, sometimes up to 14 months later. That's a game changer for EV sales. Here's another one. BYD. Okay, BYD, that's supposed to be the good one with EVs, right? Look at this. BYD reduces shifts at plants, EV plants in China. BYD has reduced shifts at two auto assembly plants in China. People with knowledge of it told Reuters. This is an older article, this is from a little bit earlier in the year. BYD, which outsells Tesla only because they're also including hybrids, they're also getting hit this year. Look at this one. I want to give you the dates of these articles. I know that one was March, but this one here, November 1st, 2023. Here's a Fortune one. On Mercedes was October 26, 2023. Here's Volkswagen. Volkswagen delays fourth electric battery plant over sluggish sales. November 1st, 2023. And look at some of the details. Volkswagen Group announced its plans to open 6 gigafactories, copying Tesla, by the end of the decade. They've already chosen 3 sites, including, Germany being one of them, where we're exporting deflation from Germany. Germany and China are exporting deflation. I want you to know that. That is a great thing. Germany, China, exporting deflation makes it cheaper for Tesla to produce vehicles. That allows us to buffer margins, which is great. We might be at that bottom for margins soon. If not Q4, probably Q1 of next year, or certainly the first half of next year. Anyway, there is time. Okay, here, Bloom explained, there is, for the time being, no business rationale for deciding on future sites. Basically, the ramp up of selling EVs is not strong enough to worry about these future sites right now. Okay, fine. What about Ford? Ford, this one's from February 2023. Ford to build $3.5 billion electric vehicle plant in Michigan. Okay, that's Ford, right? That was announced in February. Guess what just happened? You go to CNBC.com. Front page, baby. Front freaking page. November 21st. Ford to scale back plans for the $3.5 billion plan. Bro, the government is literally throwing money at people to do battery plants and electric vehicle plants right now. They're giving you stimulus checks right now to do this. And Ford is saying, yeah, NTY, bro. We got to scale back. So take a look at what they're saying. Consumers slow to move to electric vehicles. They're slow to move to bad electric vehicles. I want to be really clear here. Like, most EVs suck ass. They're like golf carts with acceleration. They take forever to charge and they have crap range. Teslas are good. Tesla's charging infrastructure is a godsend. FSD is a godsend. I drove like 30 miles from Dave & Buster's to Coldstone yesterday. 0 interventions. From parking lot to parking lot. This stuff is good. And I don't even care that it's not 100% full self-driving yet. Who cares? I'm sitting in the damn car anyway. Like, think about it. What's the difference? What is the difference between full self-driving that we have today with no interventions and a robotaxi? What is the difference? Well, you have to wobble the wheel every so often. Okay. What else? I guess you technically are supposed to pay attention to the road, which is good. Yeah, you're supervising the car. It'll be a while of us doing that in the robotaxi anyway. But from a practical point of view, there's a little difference. In my opinion, at least. So that's a 0 intervention drive. And even if you have to take over every so often or intervene, that's a nominal inconvenience given that 95% of your drive time is doing nothing. You could kind of, what the trick is, you put one of those suction cups on your windshield, and then you put your phone on that, and then you could watch YouTube. But still pay attention to the road. Don't break the road laws. Follow the rules. Maybe don't watch a video. Listen to stuff. I like that idea. Because what I like to do is I like listening to stuff and paying attention. Because you can pay attention while listening to stuff. Anyway, so, and I always think, it's so stupid. This is just, and then I want to get back to this. I think it's so stupid when it's like, oh, you want to text and drive or whatever, and then people do this. They're doing the this. Because, bro, now you don't even see the road. At least if you're going to, send a text while you're driving because, your wife's freaking out or whatever, at least have it in front of you. So, peripherally, you could see. If you're going to break the law, at least do it less bad. Not an endorsement to break the law. Don't break the law. All right, so Ford scaling back. Ford executive Jim Farley initially announced the plan in February, quickly became a political target due to its connection to CATL, which is Chinese. Ford said Tuesday it's cutting production capacity by roughly 43% and cutting jobs from 2,500 to 17. Oh, there's a catalyst for the Fed as well. Interest rates too high. You want to stimulate job creation? Hello, Fed. How about we lower rates, which they will do, and then you stimulate job creation because you're stimulating EV demand again, which what does that do for Tesla stock? I'll let you imagine that. The biggest catalyst right now for Tesla is interest rates. I literally said that in a Yahoo Finance interview. I don't remember where it is, but it's worth seeing. There's Yahoo Finance, me, Kevin. People always get mad at me when I go on these because I speak my mind, and people get absolutely frustrated about that. But anyway, one of the things I said, they're like, oh, well, aren't you worried about, Elon's antics or whatever affecting the stock price? And I said, no. What I'm worried about is interest rates, because once interest rates come down, I can't find it right now. Once interest rates come down, I tweeted it. That's where it was. Once interest rates come down, that's it. That's it. It's your catalyst. But we're not even done. We're not even done. Look at this. Look at this. You go over here. GM now. And this article is from October 24th. GM delays production of Chevy Equinox, Silverado, and GMC Sierra EVs. All of them. All of them getting delayed. The automaker said is delaying volume production of a new slate of EVs for just a few months. Sure, just a few months. That's what they say now. Softening prices, dropping sales, they're negative margin. These people are losing money hand over fist on these vehicles. And if you want to make money, go to meetkevin.com and take advantage of the Black Friday sales so you can understand how to buy wedge deals and build wealth the real way, how to actually have an entrepreneurial side hustle, learn something during a tough time in the economy. Now's the time to do it. Check out that Black Friday sale at meetkevin.com. So this company, the company says it plans on producing 1 million EVs by 2025. Yeah, right. Company said it would sell 400,000 EVs in North America from 2022 to mid-24. All of that has been wrong. It's clear we're dealing with a lot of uncertainty, blah, 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 delaying the production of the EVs. Today, GM's financial officer said EVs over the next decade will be choppy, slower than expected ramp. You realize what this does, right? All of this, all of it, makes it way easier for Tesla to win. That is why. Okay, because of the fundamentals, why Tesla is the top position in my actively managed ETF and my own personal exposure. And again, that is because of the fundamentals. I'm not being bullish because that is my position. And I want to be clear and transparent here. Because I'm a licensed financial advisor, I just passed my Series 14, my 24, my 7, my 65, my 63, my SIE. I've done a lot, okay? I want to be very transparent and clear, always. So, with that said, thank you for watching. Go Tesla. And keep in mind, Elon's winning here. Brilliant moves by Elon.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than House Act, nor am I presently acting as a market maker.